Oh man, I thought I could beat it, but I guess not. I couldn't beat it, but here I am. We're here. Oh, is it invalid? Oh no. Okay, wait, guys, give me a second. I'm gonna have to configure this. Lou, can you take over for me real quick? I'm gonna have to configure.
Okay, sure. Hey, everybody. Welcome to Crypto Mondays in VR, although none of us are in VR. We've got two great guests joining us today, William Noble and Garrick Hileman. So, hi, William.
Hi. Thanks for having me on the show. I'm happy to be here.
Terrific. And you're calling in from, you said, from Houston?
Yes, I'm working remotely from Houston, Texas. At Tokenmetrics, we've got people spread out all over the globe.
And Garrick, welcome.
Pleasure to be here. Thanks for having me.
And you said you're dialing in from San Francisco?
California.
Yeah, somewhere in the state of California?
Somewhere undisclosed location in California.
Okay, terrific. Well, welcome, guys. Annalise is having, I guess, a little bit of technical difficulty with her VR. I'm sure she'll be joining us in just a moment. But William, why don't you start off and tell us about Tokenmetrics?
Sure. I'm the technical analyst at Tokenmetrics, and what we do is we are a research firm, crypto intelligence, market direction, okay? And we leverage AI, machine learning, and human analysts, all right? We've mixed that together to create a product consumable by retail investors, all right? So if a retail investor is like, God, you know, how do I compete against the quant funds? Okay, Tokenmetrics gives them the ability to do that, all right? And we brought a team together of guys from IBM Watson's team to blockchain technology people from JP Morgan and myself to try to round out a team that, you know, helps the little guy in crypto.
Cool. I'm sure the little guy can use as much help as he can get. What are kind of the main tools that are being used?
Well, Tokenmetrics has a variety of rankings. The most popular tool is price prediction, where, you know, the machine learning will take the last 30 days of price and try to project out what's going to happen over the next 30 days. Okay, it works great in a trend, and traders love checking their own ideas against that. Then we've got something new that we came out with indices, okay? Depending on what style of trading or investing you want to do. Again, not investment advice, but we actually help people build portfolios of altcoins, okay? That's our specialty.
Oh, wow. So each of those is individualized?
Right. So you can say, I'm a trader and I'd like to know what the AI thinks for the next week. What are the 10 coins that rise to the top? The AI and the machine learning, they use like competing ideas against each other. And then what happens was only the best ideas and only the best coins rise to the top. And that's what creates the indices. So if you're a trader with a one-day horizon or a 1 month horizon, we have a few indexes that will help you. If you're an investor and you want to look long-term, you know, you almost want to take an equities approach and do quarterly or annually, maybe think like Warren Buffett for crypto and altcoins, find something undervalued. We have a section for that as well.
Oh, wow.
That makes sense.
Very cool.
What about you, Garrick? Tell me a little bit about yourself and blockchain.com.
Right. So I'm the head of research at blockchain.com, which is one of the oldest crypto asset companies. It was founded in 2011, became, I think, first well known for its Explorer. Explorers, for those who are new to cryptocurrencies, are like search engines for blockchains. You can look up transactions and whatnot. And also our wallet, our non-custodial wallet, was one of the first kind of cross-platform non-custodial wallets on the web, iOS, Android, et cetera. And we've more recently become well known for our exchange and some of our killer interest products. Right now, you can earn, for example, 12% annually on your US dollar stablecoin deposits. the lending market is an area that I've also focused a lot of my research on recently. And we share our research through a monthly webinar. We have a new podcast. We publish on our blog on Medium a lot of our key insights and findings. And we're thrilled that millions of customers have chosen to use blockchain.com, trust us through the years for their crypto asset needs.
Awesome. Yeah, I think blockchain.com was probably one of my first onboarding ramps that I learned, because it's literally blockchain.com. So.
We have a big search engine optimization advantage that helps drive a lot of free traffic to our website. And so we feel a special responsibility to educate, users about, what is a non-custodial wallet. There's a huge learning curve with cryptocurrency. We know that, from various studies, 80% of people in countries like the US have heard of Bitcoin, but things like a non-custodial wallet and how different that is from a traditional bank account is still very foreign to many, many people, even who own cryptocurrencies. They find out, unfortunately, after the fact, whoa, I need to look after this thing called a seed phrase and manage my private keys very carefully.
Yeah, a lot. I've noticed the more I get into the space and the more I talk to people, the more they either A, are misinformed, or B, are uncomfortable about handling their own finances. So education is a big must. Big must. Super big on education.
Garrick,
and go ahead.
No, I was just saying when we were catching up before the show, you'd mentioned that you'd been in crypto since 2011, which is pretty early.
Right. As an educator, as an academic, it's important to clarify here. So during my PhD at the London School of Economics, was doing research on alternative currencies and came across Bitcoin. I thought, whoa, this is quite interesting. This looks very different than the types of currencies I'm currently researching. And, I started working at CoinDesk in 2013 as kind of moonlighting there. You're not supposed to take full-time jobs during your PhD, but, don't tell anyone. I didn't put my name on the research reports, the State of Bitcoin report, and then we changed that to the State of Blockchain report, but I launched those. So I've been very active through the years, teaching in the universities, in corporates, spent a lot of time getting to know regulators and policymakers around the world, trying to help those folks understand this space. It's trade-offs. A lot of people come into the cryptocurrency space for the first time, hearing horror stories about dark web marketplaces, ransomware, and those things exist. And it's important to kind of understand that aspect of cryptocurrency, but also some of the positive sides as well, and trying to make sure people are well informed before they both participate as a customer in the cryptocurrency space, but also regulate the sector.
So let's touch a little bit upon security, because that's something that kind of like resonates me a lot. So let's go into, I guess, how does blockchain.com help consumers keep their cryptocurrency secure overall?
Yes. I think that subject is foundational, and I'm so glad we begin there. We would not be here talking today if not for security and right. The security first and foremost of the Bitcoin blockchain and subsequent blockchains. Everything, in my opinion, rests on security. And once you have a secure protocol and chain, you can start to do things like build interesting applications and companies around that. But that's the bedrock. And we, as an early company in this space, have always believed strongly in the mission and the power of cryptocurrency to give people control of their financial assets, put them in charge. We talked briefly earlier about a seed phrase and your private keys. These are very, very powerful tools that we equip our customers with to control their assets held in their blockchain non-custodial wallet, so that even if our company were to go away, you would not be unable to access your funds. We think that's one of the most secure ways to participate in the cryptocurrency space, is to have that kind of control of your assets, the ultimate security, but also the ultimate responsibility. If you lose control of your private keys or seed phrase, we can't reset your password, so to speak. That's something a number of our customers have learned the hard way. And we work really hard to try to continue to educate folks that this is not like a bank account. This is not like a custodial account at the blockchain.com exchange, where we do have custody of user funds and can do things like password reset. You have your private keys and seed phrase. When you open a blockchain.com non-custodial wallet, you have the ultimate in security, but also the ultimate in responsibility.
That's awesome. Yeah, another thing that kind of came to mind while you were mentioning that, because I remember one of the first time I got scammed, I was brand new to the crypto space, and somebody had told me to open up a wallet on blockchain.com so they can, I guess, install a miner in the background. How do you guys inform, any onboarders or new customers about, these people that can contact them and tell them, hey, if you open a wallet here and give me this information, I will, let's plug in something to the back of your wallet and you'll get Bitcoin mined, so something like that. How do you guys, I guess, help prevent that or inform people about that kind of stuff?
It is a never-ending battle. All right.
Yeah.
We are
absolutely.
We are consistently impressed is not the right word, but it's incredible how creative fraudsters are at impersonating blockchain. Online. Sending very, very believable looking emails. I just got one recently sent to I'm also a visiting fellow at the London School of Economics. I got an email from blockchain.com inviting me to take out a loan. I was like, some kind of flash loan. I was like, I don't think we have a flash loan product. I double checked with our product folks, but it was so convincing, this email that I received. I mean, that I'm even like wondering, is this a product I didn't hear about? So you have to be incredibly diligent and somewhat suspicious and skeptical, I think, as a cryptocurrency customer and participant still today. We have a fraud team that's constantly policing and trying to chase down bad actors on social media. We have a user operations team. We invest a huge amount of money and team around the world to talk with our customers who contact us and need support. I do what I can through my research and educational outreach. It's a never-ending effort, and it's going to continue. It's just a really, when you have crypto assets, you have something like cash that attracts a lot of bad actors, and this is kind of the other side of the coin, so to speak, of the challenge with this new asset class and ability for people to control their financial, assets.
Oh, wait a second. You guys can't see me. Hold on. Everything kind of just reset for me. Sorry. I'll be right back. What about you? Tell me a little bit about how Token Metrics helps in the aspect of security, Garrick. I'm sorry, William.
Yes, we have a little bit of different approach because we're a different organization. So we start with our YouTube show. Right. We have a live stream where a lot of new people tune into. Right. And we're very big on telling people, not your keys, not your crypto. Now, what does that mean? Right. We clarify that by telling people that you've got to have your crypto in more than one place. Right. Some on an exchange, some in a soft wallet, some in a hard wallet. Right. Not all in one place. Now, everyone, all the guests on the show know that, all right? But we can't say it enough times, right? And also our research rankings, they help filter out scams, right? In other words, if you go to our site, say now, and even more so when we add even more coins in, say, a month, you'll be able to see if whoever is trying to scam you with whatever token, is it on Token Metrics? And then we also provide discussion forums for premium people. So if you get that blockchain.com email, even though you're at the London School of Economics, you can come in and ask either our research team, our code review guys, or even our customers in an open forum discussion and say, hey, have you ever heard of this?
Right.
Mostly though, for security, we're telling people not all your crypto in one place, not all your bets in one coin. Again, sounds obvious, but the temptation of, the moon can sometimes lead people astray. So we've also got Token Metrics Academy coming out. It's really it's a robust online learning experience. And I don't think we're charging people for it, right? We want people to be educated, and we want them to get their education, with us, right? And the more people know, the more we help them learn. Once you catch the crypto bug, I'm sure we can all agree that, it's a way to discover what you want to do when you grow up.
How do people find out about the token metrics? And what do you know about your customers and how that's evolving as the crypto space evolves?
Okay, great question. So youtube.com/token metrics is where people start with the live stream. We'd love you to go to tokenmetrics.com. Where we have a variety of plans. That's where we have the rankings, the price predictions, the indices. Okay, so that's where you can go to get the tour. We've made a name for ourselves on YouTube. Like, we have a lot of affiliates. Okay, we've actually went from no customers to being a going concern, paying $200,000 in commissions. Big YouTuber, right, because big YouTubers love the altcoin space, right?
Do they?
They do. They do. And they like to use us as a research tool. All right. And then, if their users sign up, then they get a commission from us. We're actually coming up on our 1-year anniversary. My boss told the tech team on Black Friday last year, or right before, he's like, hey guys, we're opening doors. We're launching. The tech guys are like, what? Yeah, let's go. Right. And then, DeFi and altcoins got us off the ground. So that's how we help people, particularly in that altcoin space, right? So easy to get scammed, so easy to get misinformation, right? We want to be, like the Charles Schwab of altcoins. We want to help people trade and invest in crypto.
And we were asking about your customers, what you know about your customers.
Right.
Kind of how
customers. All right. So our customers, classic crypto, right? Ages, 18 to 40. Okay. Or 25 to 40, with an average of 85K invested in crypto. So it's definitely a group that has a level of sophistication. We've also gotten a lot of interest from emerging markets. Okay. We developed a Token Metrics scholarship program. So if somebody were, yes. So if somebody signs up or helps sign up 5 people, we give them a membership. All right. And that's because demand from emerging markets got so high.
Mm-hmm.
All right. And our hope, right? Like, who are your customers, right? Our customers are people who are into crypto. And what we want to try to do is build the bridge, right? Sure our, Garrick may feel the same way. The bridge for legacy investors to cross over into crypto, right? We want to look like, sound like legacy research, sophisticated quants, talking heads, right? To help them invest and trade so they can get used to it, right? Because we're in a world now where the planet needs crypto. It's not just a hobby for guys living in their basement.
Do you share the same sentiment, Garrick?
Absolutely. I think it's helpful to have, kind of things that are familiar, like research, that resemble kind of the traditional legacy kind of financial world, as we kind of help bring people into this new kind of financial system and new asset class that we're all building here. We just coming to your question about, who are the blockchain.com customers. One of the things we share on our monthly webinars and in our monthly market outlook blog posts is a little information about transactions we're seeing using the blockchain.com wallet. We can't collect, given the non-custodial nature of our wallet, as much information as a full custodian can, but we can monitor things like where we're seeing an uptick or an increase in activity. At various times we see the blockchain.com wallet representing between 25 and even as high as over 30% recently of all Bitcoin transactions.
Right.
And so that gives us kind of a unique position to say, oh, it's really interesting that we're seeing, for example, all this increased activity in Africa or in a country like Nigeria or something, whereas we're seeing a decline in China, and to try to think through what could be behind that. We don't always have, a great story or narrative around the data, but we can at least present that data. And that's something we regularly try to do, and it's a good reason to kind of tune in if for our monthly webinars to get access to that unique data.
That makes sense. So I want to talk a little, because you guys mentioned just some stuff about DeFi and the trends in the market that we've been seeing. I guess, what are some of the common trends and some of your advice regarding these trends in aspects of people staying safe? Because I'm sure you guys seen people getting rug pulled and getting wrecked, and people creating their own liquidity, and the list goes on and on.
All right, well, I'll jump in on that. We're telling people to stay with blue chips in altcoins, right?
Okay.
In other words, think about what happened over just 2 months in crypto. In 2 months, we had a 2017. And people watched other people make life-changing money, and now they're all on Uniswap and they all want in.
Right.
And that's when the sharks come out, right? Okay. We're telling people that there's a lot of quality crypto. Yes, it went all the way up and all the way down. A lot of people got caught up in that. But if you didn't, if you just arrived now might be a good time, because a lot of this stuff is available at like Black Friday prices. So we think DeFi is not dead at all. Okay. The idea of having an alternative financial system and the idea of cryptocurrency having an interest rate mechanism, right? Like if we take the airplane up to say 20,000 feet, the idea that cryptocurrency has an interest rate system legitimizes it. And wouldn't you know that 2 months after DeFi, 3 months after DeFi, the likes of PayPal, Square, Stan Druckenmiller all have Bitcoin, because Bitcoin isn't just a currency anymore. It's collateral, like a treasury bond. Yes, that's right. I said Bitcoin and treasury bond in the same sentence.
Would you consider Bitcoin a commodity?
I think Bitcoin is a currency. I'm delighted that the government treats it as a commodity. Okay. Because I think that allows corporations to own it like gold, or hedge funds like gold.
Right.
Okay. Either way. Okay. A lot of people want to say Bitcoin is digital gold. And if that helps them understand it, that's great. All right. But either way, I like the commodity idea, because I've led a lot of $10,000 a month research reports recently where guys are calling for a commodity super cycle, inflation, not just gold, but like oil, coal, rubber, platinum. And as I said to one of my colleagues at dinner one night, I told him about the commodity market super cycle. And he's like, yeah, we've got the most valuable commodity of all. That's Bitcoin and Ether.
You know, it's interesting when you talk about the interest rates and the impact that that's had. And Garrick, I think when you were talking earlier, you talked about how blockchain is now offering, I guess, 12% interest. And we'd just like to get some insight into how it's possible to get that kind of interest. Obviously, banks are paying, a fraction of a percent in interest.
Yeah, it's a great question. And when I mentioned this to my mother, she's like, that sounds like suspicious. I remember when I was very young, I lost all this money, lending my money to some Utah bank back in the like 40 years ago, 50 years ago or something. And, she's like, I'm not going to touch anything that sounds too good to be true. And that's actually the title of a recent blog post that we put out on DeFi, just too good to be true, ? So we've tried to kind of, explain why people are able to, earn these rates of interest. And I think the first thing to clearly emphasize is there's absolutely risk associated with earning rates of interest like this. And with anytime you lend your money to even a commercial bank, I first got invited on television to talk about Bitcoin in 2013 when, in spring of that year, Cyprus announced a surprise deposit tax on their depositors, 10% of your deposits, even though there was supposedly, deposit insurance, you were going to be taxed. So even in commercial banks with deposit insurance in the EU and in the Eurozone, there's the risk that, you may not get your money back. Possession is really powerful. But with the volatility in crypto asset markets, people are willing to pay to borrow crypto at incredibly high rates, much higher than they would pay on Wall Street to borrow a stock to short it, which, you're seeing if you lend out your stock or other assets that are in demand, rates 5%, 6%, 7%, certainly a lot higher than you're getting at your local bank to deposit cash. So we already know that you can, on Wall Street, earn attractive yield for lending out assets. And when you look at the crypto markets and how much more volatile there are, someone's willing to pay double-digit interest rates annually when an asset might move double digits in a single day. That's a real easy kind of proposition for a trader to accept. So as long as crypto asset markets continue to remain relatively more volatile, and I don't see any reason why they won't, than traditional markets, I wouldn't be surprised that we'll see a premium paid for borrowing. And that's kind of what's on the other side of the equation. When you deposit funds into a crypto asset platform like blockchain.com, there's traders who are willing to pay a lot to be able to borrow that to go leverage long, to short it, to avoid, say, some kind of complicated tax treatment by gaining exposure without having to sell something. I mean, there's all sorts of reasons, which we talk about in our research, why people borrow and are willing to pay those rates.
Yeah, it's certainly exciting. I think certainly bringing a lot of people to crypto. What are you seeing in terms of when you look out at DeFi over the next 6 to 12 months? What kind of products do you think we'll be seeing that we're not seeing yet? Right.
So we added 2 DeFi tokens to our exchange, Yearn, YFI, and also Aave. Those 2 projects have been, I think, considered some of the blue chips of the DeFi space. We just had a podcast actually with Sam Harrison, who's who runs blockchain.com Ventures. And we were talking with Sam about what products he would really like to see that he has not invested in yet, something that he's personally very interested in. And insurance topped the list of products for him. And I think that's also a huge opportunity in DeFi and in the crypto asset space in general. One of the big differences right now between going to a bank and say going to blockchain.com or a DeFi operator is the government's guarantee. Now, how reliable that is, we could debate. It's something as we just talked about in Cyprus. I mean, apparently not that reliable at all, right? But there are at least some instances, of the FDIC, for example, in the United States bailing out depositors. There is a track record of doing that. And that's something where crypto, I think, is behind and could really catch up with some really exciting, I think, innovative smart contract insurance protocols.
So that's fair. So, and I kind of want to access to both of you regarding, I guess, a little more on DeFi in comparison to, let's say, other digital assets like NFTs. Where do you guys see any correlation within, either company? Do you guys see yourself getting into other digital assets besides, the Yearn Finance and those kind of things?
Yeah, I'll just answer that real quickly. We also, launched a digital gold token product last year. So we're even, going into spaces where we're digitizing physical commodities.
That's awesome.
We're absolutely looking to continue to expand and cover the broad spectrum of digital assets as the space evolves.
Okay.
Yeah, we're getting ready for the tokenization of everything. Right. Skyscrapers, the Mona Lisa. Okay. I think when it comes to DeFi, one of the themes that I've been looking at is the idea of highways, right?
Highways.
Yes. Like Ren BTC, like wrapped BTC.
Okay. Yeah. Wrapped BTC.
Right. Ren is a company that also offers that wrapped product, but Ren is like a tollway across blockchains, right? From Bitcoin to Ethereum, or from Ethereum to Zcash. And then I found out from, somebody who is running nodes that it's going to be like the airport shuttle between Polkadot and Ethereum. All right. So this is just one story about how the market, okay, keyword there, the market, not the central bank or the treasury, the market is building interest rate plumbing. All right. And then I don't think you can count out your Chainlinks of the world, right? All these firms like, Chainlink is going to work with Ethereum, and then they're going to work with a small token company called Matic out of India, right? So there are going to be, even with Ethereum 2.0, there are going to be 2 or 3 DeFi highways, like say in New York, right? It's the Parkway, the Turnpike, and maybe the West Side Highway. Now, NFTs. Everybody came on our show when DeFi blew up and was like, oh, what about NFTs? Right? So everyone missed DeFi. Now they wanted to get into the next thing. And I was like, oh my God, are we really going to trade your little brother's baseball cards on a blockchain? Are we really going to do this? And then I saw the Wolf of Wall Street on Twitter.
Oh, you did.
Okay. I was a comic book guy growing up, and he had this sort of animated black and white sketch of Batman. Okay?
Right.
So I was a Batman guy in the 90s, and this guy on Twitter was like, keep making fun of this NFT space. And I was like, oh my.
Oh my.
So this is where I go back to this tokenization of everything. I think in a pandemic world, NFTs are going to give artists a way to make money. And then I think it's also going to be a way of, when I say tokenize everything, it's going to be the market's opportunity to create new things. Like, there's securities, bonds, currencies, real estate, but maybe there's art, or maybe your little brother's Pokemon cards do have value, because after all, value is a perception. So, at first I was like, oh my God, because we had some caller come in and want to do DeFi and borrow against his little brother's baseball cards. And I'm like, oh my God. But again, it's going to give people a way to participate in something that the marketplace, the free market, creates.
That's fair. That's very fair. And it's very true, because recently, I don't know if you guys have been keeping up with any of the blockchain. I'm into blockchain gaming. That's kind of like my lead way. But PewDiePie, he's like one of the top streamers, like one of the first original gaming streamers. And he has millions of followers, makes millions of dollars a year, just signed on to sell his skins in NFT with a AR blockchain game. So, I mean, we're starting to see really big players get into, the different spaces and niches within blockchain, and it's kind of really exciting.
Right. We just have to keep our fingers crossed that there isn't a big scam either in NFTs or in DeFi, like the really, really big scams, right? Like,
yeah,
that gets regulators' attention.
That's questionable because I have heard people have had the tendency of, I guess, hyperinflating their own NFTs. I've heard like artists, for example, they'll buy back their NFTs and people will then go rush to try and buy it to, I guess, make a profit off of it or flip it. I've heard that was a trend. I don't know how true it is, but I don't know if it's going around, then it must be. So really quick question. We got a question here in the chat. It looks like it's for William. How do you think DeFi lending compares, to a bond issued by an institution that pays cryptocurrency?
Okay, that's a good question. So with a bond, okay, you're dealing with perhaps the credit worthiness of one issuer in particular, right? In DeFi, because it's decentralized, I guess your risk is more associated with the plumbing of the DeFi system that you're using. So rather than counterparty risk, you would have platform risk. And you'd want to be doing business on a good platform versus just the way in bonds, you would want to have a solid counterparty.
Okay, I hope that makes sense, Speedy from YouTube. I have another question. Is there an affiliate program for blockchain.com?
Short answer is no. We have not launched anything like that. And again, that's partly because we haven't needed to, because of all the wonderful traffic that comes to us via Google and just word of mouth, of course. But it's something we think about, and just because we haven't done that or don't have it right now.
Commerce.com. Ideas for building your word of mouth marketing.
My Google is going off. Hold on, let me tell it to be quiet.
Have you guys, we talked about the NFTs, have you guys spent much time or have views on the personal token space, like with Whale Shark and his NFT program, or Karma DAO or Alex Coin?
That I have not seen. I know we had a YouTube show guest who had an artist make an NFT of him, and he kind of showed it. And while we were on air, he shared his screen, and one of the YouTube audience players bought it. It was a little sketch of him for $10. I was like, it's like baseball cards all over again.
Yeah, tokenizing people is definitely on the kind of bleeding edge of tokenization. Lots of question marks there. Lots of ethical kind of questions as well around that. And, just indentured servitude. And, there's just like, something that I think we need to really proceed cautiously around. It's very interesting. I mean, the idea of being able to, wherever you are in the world, just like with the ICO phenomenon, you could become an early stage tech investor. That's really empowering, very exciting. The idea that you could raise capital to bootstrap something no matter where you are, that's very interesting as well. But I think when you get people involved, what we've seen with cryptocurrency and blockchain technologies, you really need to proceed cautiously from an ethical perspective. There was in the UK an early pilot of blockchain technology, and they decided to experiment with folks who were on benefits and receiving benefits payments via the blockchain. All sorts of privacy concerns were raised and so on, and really was I think quite a good lesson in how you want to think carefully around this technology with vulnerable populations.
That makes sense. Any views on central bank digital currencies?
Yeah, that's something I'm particularly focused on. We published a big piece this summer about the U.S. digital dollar. We'll be following it up with more thoughts now that we've had the election here in the U.S. It's moving quickly. You hear stories about, oh, we're thinking about this seriously, but we don't have any imminent plans. I think a lot of the timetable on this might move in a way that's faster than many policymakers and regulators are comfortable with for various reasons. I think China can be a big driver for kind of expediting the rest of the world kind of getting on board. I think the cryptocurrency space is also helping to expedite getting central banks kind of in gear on this topic. So yeah, I think we're going to see a lot in the next year or two on the subject of central bank digital currencies. And it's certainly something going live sooner rather than later somewhere.
Somewhere. I like that answer.
Right. Central banks want to control fiat onboarding into crypto, right?
Right.
So if you have Bitcoin and then you want to go to an exchange, the Bitcoin blockchain is the most surveilled blockchain on the planet, right? They can see who's coming and going. But with stable coins, when you go fiat,
not who.
Right. So if you go fiat to stable coins, Uncle Sam in particular and law enforcement may be interesting in who's doing that. That's one of the drivers behind digital dollar. I think the other idea is that the government may have to issue digital dollar as like a replacement for food stamps, welfare, and Medicaid. Like, for example, if you had a digital currency or a wallet and you received digital dollar from the Fed, you could use it, not to get on Robinhood and buy Tesla, but you could use it for food, clothing, shelter, transportation, right? They could have some control over what you could use that token for. Mm-hmm. Okay. This idea of universal basic income, which people laughed at as some sort of Silicon Valley curiosity, could now be, a real thing that, along with China doing it,
now you're talking.
A way for Uncle Sam to get involved. And a final point, if Uncle Sam can't build it in America, if you can't build it, you buy it or you partner with somebody. And don't be surprised to see Uncle Sam either through kind of like a strong arm regulatory way, or maybe we could do it in a friendly manner where they start partnering with stable coins that already exist and do digital dollar. They almost outsource digital dollar.
Right. Mm-hmm. That's actually a really interesting way you put it there, especially when you start mentioning, limitations on people how to spend it. Because they already do that with, let's say an HSA that you get when you get insurance. You can spend that money that you put aside on certain things. But I never thought of replacing these already existing government programs with AKA, federal digital dollar or something of that sort. That's actually a really interesting perspective to look at that. And I mean, I guess that kind of gets me thinking when, they do talk to, let's say, companies like Ripple, and they are talking about getting a digital dollar and creating these frameworks for potential integrations in the future. That kind of gives me some better insight on that. So thanks for that.
No problem.
The one other point I'll just make on this, because this is a hugely important topic. By the way, I think this is generally very bullish for crypto assets, the digitization of fiat currencies. But I think a lot of this is going to come down to not the central banks. It's going to be at the congressional level. That questions like how much privacy should a U.S. digital dollar have? What characteristics should it have? Is it going to be more cash-like and bearer in nature? Or is it going to be more centralized where you have an account at the Fed and all of us can open up an account there? I think these questions the Fed may have an opinion on, but it's really going to get kind of kicked up to the political level to decide these things. This is not a question the Fed can, by itself kind of make the call on, how much.
Yeah, I kind of agree with you on that one, especially if it is going to replace or, William was saying, if it's going to possibly infiltrate other sectors and replace government programs, that's definitely more of a congressional thing. And then the next question is, do they even need central banks? Like, yes, we're in debt. And I mean, I guess because we're in debt to the Federal Reserve at that point in time, they would still need a cut of something, but they wouldn't really need to go to the central banks or the Fed at all. Because it's, they can just do it themselves or partner.
Right. I'm kind of hoping that Congress doesn't have control of how many digital dollars the Fed can issue. Hopefully the Fed is, hopefully, it's like we want to have digital currencies, not sugar highs. Right.
Yeah. Well, Garrick, in the work that you've done, and when you looked at CBDCs, do you think there's a risk with China and other countries at putting the dollar's position as a kind of global reserve currency? Does that get at risk with CBDCs?
I think it does pose a challenge, and some people have kind of that no one wants to hold the renminbi, and they don't trust the Chinese government, and the Chinese are constantly trying to shift their resources out of the country, and they have to put capital controls in place for that reason. And the U.S. has got this big open economy because we have so much credibility and so on and so forth. But the fact of the matter is, China's economy is continuing to grow and grow and grow, and more trade is going to be denominated in the renminbi, in the yuan. And historically, reserve currencies have tended to follow who's become the largest trading power. And so it's you see how China is also kind of expanding into the developing economies of the world, and that's where I think the digital currency is going to be kind of aggressively kind of rolled out. I don't think China is expecting Europeans or Americans to embrace the digital yuan anytime soon. But in a country where there's already a lot of bilateral trade going on between China, and say, Tanzania or something, for example, China's going to have a lot of leverage to kind of probably get some of that trade shifted over into the digital yuan. And this is there's been three things that really put the CBDC conversation into hyperdrive in the last year, as we wrote about in our blog piece. Libra was a wake-up call that blockchain technology was ready for prime time for billions of users. COVID illustrated painfully how antiquated our financial system is, money is, paper checks getting mailed, not just around the US, even internationally to Americans overseas, billions going to people who are dead, and so on. But the China threat is really the thing that's going to be more persistent, and it's going to, I think, drive this bipartisan kind of realization that the U.S. needs to kind of step up and digitize, and it could happen a lot sooner than I think a lot of people think.
I got to say, even the use of the word threat obviously connotes things, and our government, and obviously our government today is kind of weird, but they talk a lot about
kind of weird,
kind of being the enemy, and I don't know if you see it as the enemy, or you just see them more as a rising economic power. Empires rise and empires fall. That's what empires do. We had a good run. I don't know if you guys follow Ray Dalio, but Dalio's analysis says that we peaked as a superpower in kind of the mid 50s and have been going downhill while China's been ascending. So I don't know.
I've heard that a few times.
Yeah.
Well, I'll defer to my PhD supervisor, Neil Ferguson, who's a Stanford professor now, on this topic. He's speaking. He did a good podcast recently with Professor Galloway from NYU, all about China, the new Cold War. He thought, 10 years ago, we're just kind of a strategic, kind of competitor. But he thinks it's a lot less clear now, kind of what China really wants to happen to America, and whether, 10 years ago, maybe they would have been really upset if their largest customer kind of fell over. Maybe not so much now. There may be more kind of, dire kind of competition kind of going on in the years ahead than we thought a decade ago.
Being that China wants to take over the world, I mean, because we're I think far more imperialistic than China is.
Well, communists don't do anything without a plan. You know what I'm saying?
As opposed to our government, who does lots of shit without any plan.
Right.
Wow.
Well, sometimes we fly by the seat of our pants, but for the Chinese,
there's no plans. Right.
For the Chinese, short-term planning is 50 years.
Yeah.
Right.
We link to a lot of stuff in our monthly outlooks, a lot of China stuff. I thought one of the most interesting pieces, it's on Amazon. There's a good, I think it's The Coming War with China, I think might be the title of it. But one of the first things they do in that documentary is they kind of like show you a map from China's perspective of all the US military bases right on the Chinese coastline. I mean, China is completely surrounded by US military assets and potentially hostile, allies of the United States. Imagine, here in the US, if like the Eastern Seaboard had like Chinese military assets kind of within, not too far.
Called that a miscover in the 60s when that happened.
Yeah, I mean, I'm just trying to say from the Chinese perspective, I kind of get why they might be a little uneasy about, kind of the situation and wanting to kind of, see some changes made. But yeah, we're moving into a dangerous phase of the world here, and it's something I worry about, and I think we all need to carefully watch the Chinese-U.S. relationship very carefully. And hopefully we can find a win-win here. I think that this doesn't have to be zero sum. I think that was the view in the Cold War. It was very zero sum. It was either Soviet Union and communism was going to win, or U.S. and capitalism were going to win. I think, there's been a very symbiotic relationship between China and the U.S. I know some people debate that. Obviously the hollowing out of manufacturing and all these things, but any kind of conflict over Taiwan or something could be absolutely devastating for the whole world in a very bad way. So let's all work together to try to create a win out of this.
Well, cool. Well, thanks. It's certainly an interesting topic to discuss. So, Annalise, we're coming up to the top of the hour here.
Yeah, we've been streaming for almost a full hour. Usually we keep it to like 30 minutes, but you guys have been amazing, and you've answered so many of my questions. You've given me better insight and some insight to our viewers. Thank you for everyone who joined us in VR and anyone who joined us on YouTube, Twitch, and Periscope. I really appreciate you guys for coming out. And one more time, gentlemen, where can people find you?
I'm at tokenmetrics.com. You can find us either at youtube.com/tokenmetrics for the live stream, or tokenmetrics.com for all of our products.
Awesome.
And blockchain.com, very easy to remember. And you can find me on Twitter at Garrick Hileman. Check out our blog, our research page, and our monthly webinar and podcasts for our latest insights and educational materials.
Awesome. Thank you so much, gentlemen. Again, guys, this has been Crypto Mondays in VR. Well, kind of VR. I'm in VR. Crypto Mondays VR. Join us next week. We will have Swiss Key on. It was a pleasure having you two. We're going to get out of here.
Thanks, Garrick. Thanks,
Thank you.
Thanks so much.